Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com. Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi, this is Daniela Cambone, and welcome back to our Outlook series here on Stansberry Research. We are talking Bitcoin, which so far has had a rough start to the year, and could 2022 bring in more pain? While some bulls continue to forecast 100,000, well, my guest today doesn't see that happening this year or next. He has said in the past, quote, "Long term, I love cryptocurrency, I love Bitcoin, but the charts, and I'm a technician, are not showing that."
Long term, hugely bullish. Short term, there's a liquidity issue here that could be drying up, and that could force Bitcoin down.
So please welcome back Gareth Soloway, President and CFO of InTheMoneyStocks.com. Gareth, always good to see you.
Hey, thank you so much for having me back. It's great to be here.
Absolutely. It's our Outlook series, and we have a lot of bases to cover here because last time you were on, you made headlines because you've always been bullish Bitcoin in the past. But the last time we spoke, you weren't really feeling it for the cryptocurrency. In fact, you said you expected 2022 to see gold outperform Bitcoin. Yep. So we'll get to that. So we're going to talk all these assets. But first, let's start with your comments on Bitcoin, because the last time we spoke, you said, "Hey, I wouldn't be surprised if it goes back down to 20,000." Where do you stand today?
Yeah, I'm still in that camp. I still think that you can already see the inner workings of the weakness in cryptocurrency showing themselves, right? So if you look at the stock market, we've seen a general light correction in the stock market, nothing major yet, but you're down 7 to 10% on the equity markets, and you have Bitcoin down over 30% from its high. So you can see how if the equity markets continue to correct, which I do expect them to do, the deleveraging of the overall system will take Bitcoin down much, much lower. And again, going back to the .coms back in the late 90s, early 2000s, the cryptocurrency area is so similar to that. And remember, when Amazon came out of that period, it was a $5 stock after the .com crash. Look at where it is now. So, I mean, I envision Bitcoin almost kind of like that performance of Amazon, where it's going to get smoked. But if you buy it at these lows that you should see within a year or so, you could be it's a major opportunity.
I love how you explained that on the last episode. And for the folks who maybe missed that one, if you could go over that again, because what is it about the DNA of Bitcoin that mimics the stock, price action of companies like Amazon? Why are they similar?
Yeah, and it's a great question because, if you look at it, it's like e-commerce versus, blockchain and Bitcoin doesn't seem to be similar. But in reality, look at what was going on in the late 90s. You had the emergence of the internet where everyone was starting to log on. It was this brand new technology. It was kind of changed the world, and everyone was saying it's going to change the world. And here you have blockchain and cryptocurrencies, and everyone's saying, this is brand new technology. It's going to change the world. And that creates this hype, and it created it with the .coms, where people just rushed in. They paid any price because they thought it was going to change the world, which it did, but there's always a value to that, right? And so with blockchain and cryptocurrency, same thing has happened. Everyone has rushed in. They've kind of overinflated it to a big bubble. And now you have to have that washout moment before it can kind of rise like the phoenix from the ashes.
Okay, so you do come bearing good news, just not, in the next 1 or 2 years. Now, I brought up your comments to Max Kaiser in a very popular interview last week, and he disregards technical analysis. He says it's astrology for men. When you are looking at these prices, right? Are you purely looking at the technicals, or else are you also looking at the fundamentals?
So in general, I'm focusing mainly on technicals, but I do use a portion of psychology in my trading. So one of the things when we were trading at the 68, 69,000 highs, one of the things that made me very nervous about that, and everyone was saying, oh, it's a breakout, we took out the April 2021 highs, was that you had way too much hype going on in the small investor realm. And you also had the ETF, right, for Bitcoin just launching at that exact time. It was on the futures, right? And if you go back to 2017, you had the launch of the futures themselves on Bitcoin. And that was also the high back in 2017. So you can almost coordinate these things kind of like astrology, right? But in many ways, it lines up. The hype was too much. And I just want to, I just got to rebut a little bit on the technical analysis side. Let's look at Bitcoin right now, right? So Bitcoin, it looks arbitrary. It's hovering around 40,000. Is this a level? Is it not? I want to just show you guys a couple cool trend lines. Basically, you take a trend line here, you connect it from the beginning of the move up that led us into the April highs, you connect it to this lowest point, and look at where Bitcoin is hovering right now. In addition, when you had the big rollover here in April and May of 2021, and you started to get bounces, all the bounces went right up to 40,000 here. And if you take that line across, it gives you right here. So again, notice how you dipped down here, you bounced up, then you came back down up to 40,000, down and then up, and then finally you broke out before retracing to that same level. So again, just in terms of technicals, what I love about technicals is they don't care if, what asset class it is, right? It's all about humans are trading stocks, they're trading commodities, they're trading cryptocurrencies. And we are ruled by emotion, right? Greed and fear is what drives you to either buy or sell. And therefore, charts should be universal amongst anything out there.
Okay, so if you could just pull up that chart again, Gareth, because that's what I love about having you on the show. You bring
Absolutely.
bring your fabulous chair. Do you have any indication now of when that 20,000 level would be reached?
Yeah, so the only indication I have, and initially there was kind of a head and shoulders pattern. I'm not loving that as much anymore. But the one thing I am going to watch for is breakpoints, right? So the 40,000 level is major. If that breaks, you go down to 30,000. And then if 30,000 doesn't hold, you should go down to 20 relatively quickly. If you look back at past cycles and you look back at 2017, it took about a year or so for Bitcoin to bottom out and put in the lows. And then it chopped around those lows for another year or so. So I think if you look at the $69,000 high, you probably look a year out, 12, maybe 14 months out. And I think that's where you'll bottom out. And then you'll probably stay there for quite some time as you chop sideways. So again, I even think it could go below 20,000 if we do get a major stock market collapse as well. But again, I think at this point, 20,000 or just sub is probably the right target for me to go with it for now anyways.
What thesis, if I had to ask you, would come up with of how Bitcoin acts in an inflationary environment? Is it failing? Is it doing what it's supposed to be doing? What's going on with Bitcoin versus inflation?
Yeah, so Bitcoin obviously being, in the scheme of assets, even though it is now 13 years old, it's still a very new asset and it's still run by hype, right? So eventually it will start to behave more and more like gold, being an inflation hedge, but you have too much kind of pumping going on in the cryptocurrency sector. And that's why you're seeing these wild moves that aren't going along with the idea of inflation is high, therefore Bitcoin should be going up. You have to kind of wash that out. You have to see the asset become much more widely traded amongst institutions and really held amongst many people around the globe, just like gold is. And then you should finally see it. But it's too hyped right now. It has too many smaller investors whipping it around. And really, even the whales, I mean, there's a certain amount, a small group that control a huge amount of Bitcoin out there.
Okay, when you say pumping, do you think there's too many cheerleaders out there calling for these extravagant forecasts that are doing more harm than good?
Yeah, I mean, it happens in every asset, right? And when assets are popular, you see this kind of pumping where people go on Twitter and you'll just see people calling for crazy price targets. I mean, I still remember when we were at that 65, 70,000 range, is you had, it was going to hit 100 by November. And then maybe, these crazy price targets were getting thrown out there. So I think at this point, you have to just understand that that's part of it. As an individual investor, you have to recognize that, right? You have to say, okay, this is a little insane. I'm not going to chase it up here. I'm going to wait for it to pull back. One of the best kind of analogies or examples I could give is, we all go to the mall, we all go shopping, right? Let's say I'm going out to shop for a pair of jeans, and I go to the mall and I see that pair of jeans, and last week it was $50. This week they jacked it up to $300 for that pair of jeans. Am I going to be like, oh my God, I got to buy this pair of jeans, they just jacked it up to $300? No, what I'm going to do is I'm going to say, wait till it's back on sale at $50 and I'll buy it there. People, for some reason in cryptocurrency, in stocks, they don't behave that way because emotion takes over. But I strongly encourage people to kind of think logically, wait for it to be on sale again. You almost always get another entry there.
Okay, I'm excited to get your thoughts on some other hot cryptocurrencies right now. Can we talk Solana?
Yeah, let's take a look at Solana here. So Solana right now is trading just off of key support, right? So if you connect these short-term levels on it, and let me just erase these other lines, what you can see is if you connect this pivot low to this pivot low, it looks like it's kind of hammering on that support line. So Solana to me is near support. I think it might have one more little push up, maybe back to 160 or so. But I do worry that at some point it is going to break this trend line. And once it breaks that trend line, then you start to head lower. And you're talking probably down to about the $80 level. Now, I know that's shocking for a lot of people. It's not going to happen overnight. But if this line breaks, there's no major support on the way down until you get to about $80. Then once you're at 80, there's significant support there.
Is there one crypto that you're tracking that you think might have the biggest move to the upside?
Oh, that's a great question. I mean, for the most part, I'm a fan of Bitcoin, even though I'm not buying at these points. But I really, at this point, because I do believe you're into a point where you're going to see some sort of crypto winter, where you're going to see a lot of the cryptos get wiped out, and literally you'll see them go to zero and not recover. I'm sticking with the top like 10, 15, 20 of the cryptocurrencies by market cap, and I just really want to just spread my money out. I'm not smart enough to know a lot of the inner digital workings and the technology that, there's a lot of people out there that know more about that than me. That's where you would probably be like, okay, well, this is a unique technology in this crypto, so I'm going to put a little bit of money to work there, but I'm not really good enough at that to know that.
And I appreciate your humbleness there. Can we bring up Cardano for the folks?
Yes. Cardano definitely is one. It's actually performed really well recently. It really, really well. You've had this big move up just recently here. Notice where it stopped, right? So if we look at the chart here, it stopped right on this trend line. So you can see the previous pivot high right there. So that is resistance. It's around 163 to 164, $1.63, $1.64. It looks to me like maybe you could start to form an inverse head and shoulders here, which is a bullish setup. So the inverse head and shoulders here would be your shoulder, your left shoulder here would be your head. And then if you could pull back, let's say to about $1.20 and then see a move up, this now becomes a major breakout line right here, where if you can get a breakout, this could easily trade up to about $2.40, which is the next big resistance right there. So listen, I mean, we're skipping a lot of steps ahead here. It still has to form this right shoulder, but at least it has the potential with the 2/3 of the pattern already forming to potentially create that.
Okay, one more before we move on. Let's get Ethereum in there. If not, I know I get a lot of.
Yeah, so Ethereum here. So Ethereum's interesting for sure. One of the things that I'm kind of looking for is further downside on Ethereum. I have a major trend line that I'm actually going to play as a swing trade if it gets there. It's right around 2,800, so it's not that far away. You can see that if you connect the beginning of this bigger move to the lowest point right here, that is a general price target for a decent bounce. So this would be one where I would actually be looking at it over the next week or so and expecting that if we could get one more flush in the crypto market in the near term, you could hit this level and actually buy it. And I think off of this level, you at least could make 10 to 20%. Now, in the crypto world, 10 to 20% is not a lot, right? But in my swing trading world where I'm in and out, if you can make in a week's time 10 to 20%, it's awesome money.
Absolutely. Okay, let's move over to gold now, Gareth. And I bring this up because, like I said, the last time you were on, you were calling for a good year for gold, and that it would outperform Bitcoin and the S&P. That's
Yes.
probably more shocking to me. You stay
Yes.
with that?
Yes, I still see that. And so far, so good. I mean, here's your gold chart. Now, it hasn't broken out. Gold has not broken out yet, but you can see that the very defined wedge pattern is here. And if I zoom out on my chart, there was this huge move from 2018 all the way up to 2020. And again, it's very normal for it to consolidate, for price to consolidate, which is chop sideways to lower, following such a massive move to the upside, right? I mean, I think it was, you're talking about a move from $1,150 all the way up to 2,075. So it was, 80% move up. And so to see price go sideways is very normal. And again, if you compare it to the 1975 to 1985 inflationary period, gold did this exact same thing in the 75 to 78, 1978 range before it broke out and had a monster move to the upside. So again, the bull flag is looking great to me. It hasn't broken out of this little channel here, this little wedge pattern, but I'm still in the camp that it outperforms. One thing I want to show you guys is on the S&P, we'll go look at the spiders, but just take a look at this. So this is a big concern. If you're in the market on the long side, you have to be following this channel. All right, look at the beauty of this channel going back to 2020, almost the COVID lows, and how price has stayed inside of that. And what I've been showing people here is that when you first started, you barely ever touched the low end of the channel, right? For the most part, you were trading up against the upper band. All along here, you were up against it. Here, you hit it up here, right? It was always hovering against the highs. Look at what's happened to the S&P recently. It had the move back up, and then all of a sudden, it started to flatten out. It's hitting the downward line more and more. And then look at what we're just seeing as we speak. It looks like it's beginning to break that channel. And the reason why that's significant for us as traders and investors is that this is an uptrend. And if you break it, now there is no longer an uptrend in the markets. And again, you could be talking, I think, again, the equity markets will see about a 20% drop or drawdown this year from their all-time highs, which again, should be pretty solid in terms of downside. And then you have the gold that should perform and outperform the markets.
Can you add the gold chart to this chart, Garrett, just to compare?
Yep. So you can see how the S&P really, I mean, interestingly enough, from the lows going back to 2020, gold was kind of performing with, and then it went sideways. And then, so basically what I'm thinking on this chart, and it's a great one to compare, is that you're going to get the S&P to come down, and then gold is going to go up, and they're going to kind of converge and meet up just like they did over here.
Fascinating. Oh, I love this stuff. I'm geeking out right now. Okay, let's round up this discussion as we always do with silver. It's having a breakout day here today. I don't know what it will be when this video airs, but having a good day today. Are you optimistic for silver, bigger picture outlook this year?
Yes. So overall, I am, right. And silver, what's interesting about silver is that it's making this bullish pattern just like gold has been doing. So I've been a little bit more skeptical, and I still have my gold line in there. Just, you can see it kind of tracking relatively closely there. But one of the things you can see on silver is you have the same bullish consolidation pattern. So I do think silver breaks out. I'm a little bit more iffy on silver because of the industrial side. So if you look at the industrial side of silver, if the economy starts to weaken, how much demand does that take away from silver? I think overall the demand will be made up by people just wanting to own the metals to offset inflation. And I think that's, by the way, that's another important point to bring up, is that, right now we have the Federal Reserve saying, okay, we're going to taper, we're going to start raising rates, and then we're going to actually draw down our balance sheet. Realistically, they're never going to be able to do all that. I think they're going to fully taper. I think they'll raise interest rates once or twice this year, but I don't think any more than that, because remember their dual mandate. It's all about unemployment is that other side. Now, unemployment is low right now, but if they start tapering and raising interest rates, the market is going to fall substantially. And if you have the drop that I think you're going to get of 20% in the markets, then it's very unlikely that they will continue to be hawkish and raise interest rates. If anything, they're going to say, oh, look, unemployment is rising now, and they're going to start to actually make monetary policy even easier again. And that's a great case for gold and silver.
So they would reverse course on the taper and start QE back up.
Yep, and they'll get, basically it's what's the bigger boogeyman, right? So right now inflation, if unemployment is low, there's lots of jobs. In fact, companies can't even find enough employees, right? So right now inflation's the worst monster out there. But if you get a situation where the stock market collapses enough, people will the wealth effect goes away and people start feeling poor, right? My 401k dropped 25%. They're going to spend less, which means they're buying less, which means businesses are producing less, which means they can lay off people. And once you start to see that unemployment rate go up to 5 or 6 or 7%, now you have to say, okay, well, if inflation is 5%, but unemployment is 10%, which one are they going to attack? And they're going to go for unemployment again, which means loosening monetary policy.
Fascinating, because politicians want to get reelected. How do you get reelected? Well, you're not going to get reelected with, runaway inflation and a stock market collapse, right? Like you say, what's the bigger boogeyman right here? So you're saying once, they'd be okay living with a 20% correction and then reverse course to not have that.
Yeah, I think considering the gains in the market, the Fed definitely in their mind says, okay, well, we can allow the markets to go down this much. But if it gets to the point where companies are starting to lay off employees because you have this destruction of the wealth effect, then once that unemployment rate rises a certain amount, the Fed will then have to turn towards that issue and start attacking that one, which means lower rates again and more printing of money.
Makes a lot of sense. Gareth Soloway, I appreciate all the work you put into the charts and everything you bring to us. I appreciate it so much. Come back anytime.
Yeah, thank you so much. It's really a pleasure to talk charts and stocks and crypto and everything with you, Daniela. Thank you so much.
We love it. I hope all you guys love it too. So be sure to stay tuned to stansberryresearch.com. And don't forget to sign up for premier access to content you can't get anywhere else at danielacambone.com. Thanks, everyone.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.